Today's video is made possible thanks to Masterworks. More on this in a moment. Hey there, Visualeconomik community. Before starting this video, we have to make one thing very clear. Since the early 1980s, inequality in Western countries has not stopped growing. To give you an idea, and as shown in this graph, while in 1980, the wealthiest 1% of Americans earned 10% of total income, today that percentage has grown to more than 20%. The share of the pie taken by the richest in the US has more than doubled in a few decades. Naturally, that means that there's a smaller share of the pie for everyone else, at least in relative terms. This phenomenon, this growing inequality, has led many to think that the hypotheses of the socialists and anti-capitalists perhaps were not so bad. I didn't think I'd ever say that in my life. I'm scared now. With the data in hand, it seems evident that, at least in the most developed countries, businessmen and owners of large capital are getting richer and richer, while in comparative terms, workers are getting poorer and poorer. However, well, I'm sure you're already imagining that there's something fishy going on here. The title of this video suggests that the typical social classes are becoming less and less powerful. However, the data we have just shown you indicate just the opposite, that the capitalists are becoming more and more powerful. What happens, and here comes the important point, is that data alone sometimes hides realities. Surprised? Why? And what if I told you that this increase in inequality is not the fault of entrepreneurs? What if I told you that, in fact, capitalists occupy a smaller and smaller share of the wealthiest slice of the pie? Today on Visualeconomik, we will show you precisely what may be the beginning of the end of the rich employer, poor worker dichotomy. Stay tuned. If there is one thing on which both free market economists and socialist economists have historically agreed, it is that the economic classes have always been divided into two major groups. On the one hand, the group of capitalists, those who earn money thanks to business profits or interests on loans, and who, no, they do not work directly, or at least do not work for others. They are not common wage earners. And on the other side, we have the group of workers, those who have almost no savings to lend, no business assets, and who obtain the bulk of their income thanks to their work time, which they in turn offer to the capitalists. The interesting thing is that this marked difference between capitalist and workers has not only been a theoretical difference, but has been something recurrent and measurable throughout history. For example, in 1985, the top 10% of capitalists, the richest of all in terms of wage labor, barely achieved an income below the state median on average. In other words, the capitalists of that time earned their living by being capitalists and not by working, just as the workers earned their living by working and not investing. However, and here comes the good part, this was the case until the 80s. From then on, a radical change began that turned the whole theory upside down. In just 3 decades, the richest 10% of capitalists have been progressively increasing more and more what they earned in addition to ordinary jobs. That is, as wage earners. In a way, it is as if the new capitalists have decided to devote more time and effort to earning money by working rather than investing. A bit strange, isn't it? Well, take note, because it doesn't end there. According to economists Piketty and Saez, while in 1920, 50% of the income of the wealthiest people in the United States came from the profits derived from their capital. Today, more than 100 years later, only 20% of what the new rich earn can be attributed to it. This means that the weight of capitalist profits among the richest has more than halved since that time, and in its place, labor income has become more and more important. This seems contradictory considering that, from the popular perspective, the capitalist is the rich and the worker is the poor. That is to say, in theory, it would not make much sense for a capitalist to voluntarily become a worker. So logically, I'm sure many of you are wondering, what is causing the loss of importance of capital among the wealthiest? Why on earth would the wealthy stop striving for capital in order to strive to be wage earners? Well, let's take a look. But before we go on, let me ask you, what is your favorite horror movie? Mine is The Shining. Sorry, I'm flashing back to the last month, when heat maps looked like this. Welcome to 2022, a year when 99% of companies lost value in a single day. And we're all saying, but wait, I'm diversified, why is my portfolio still getting destroyed? Sure, any single day does not make the market, but maybe we're not diversified in the right way. You see, Goldman Sachs released a shocking report just last week. It claimed that the classic 60-40 strategy of stocks and bonds won't be enough. It's down 34% this year alone, its worst performance in 100 years. As a result, Goldman Sachs says the ideal allocation for stocks has shrunk from 60% to around 45%. So what do they recommend that you do with that difference in order to salvage your disappearing returns? Invest in tangible assets like art. Goldman Sachs says that it can protect your purchasing power, even as prices rise. And the last time inflation was this high, art appreciated more than stocks, and even real estate at an incredible 17.5% per year. No wonder Masterworks has sold a painting as recently as this month for an amazing 17.8% net return, even as inflation rages and stocks keep sliding. In fact, the Masterworks' last 3 exits have all been pretty incredible: 17%, 21% and 33% net returns. As a result, Masterworks has had to acquire and release more art on their platform just to meet demand, and there is a wait list. But you can skip it just by clicking the link in the description. How easy. And as always, in everything related to investment, use your head, nothing is risk-free.
Homoplutia medicine.
The idea that the capitalist entrepreneurs are the only rich ones and that all workers are the miserable poor at their mercy is more and more of an idea typical of old-fashioned textbooks, instead of the current reality. The explanation behind this radical turn of events lies in what economist Branko Milanovic called, in 2020, homoplucia. And what he is saying is that well-off people in modern economies, and mind you, I said well-off, well-to-do, not just the ultra-rich on the reality shows, are increasingly deciding to be owners of capital, while also acting as workers in some kind of job, generating significant income from both tasks. Look, if we take the top 10% of wage earners in the United States, and we also take the top 10% of capitalists, we will see that, in reality, 30% of them are the same people. Unlike the classical theories where capitalists were pure capitalists, and workers were pure workers, now a new hybrid of mixed rich has begun to emerge. Rich people who derive their wealth from capital, but also from labor. And you'll say, well, maybe some of the new rich don't fit the classic stereotypes, but we're talking about only 30% of them. Is this really anything significant? Okay, yes, this argument makes sense, but what happens is that it is not only about the current percentage, but above all, about how it has evolved over time, and how it is likely to evolve in the future. As you can see in this graph, in just a few decades, the percentage of the mixed wealthy, those who earn large sums of money from both capital and labor, has doubled. And not only that, if we consider just the last 10 years, we will see that the percentage of them has increased by almost 50%. The question is, why? Why is homoplutia occurring? Which is causing the merging of social classes? Why are there fewer and fewer pure capitalists and workers? Well, listen up.
A new inequality?
As we have told you, homoplucia is a phenomenon that has been discovered quite recently, and because of this, let us say that there is no definitive consensus on its causes. However, economists have already started to point to a major reason that could be causing it, and that reason is wage extension. I mean, before the 1980s, human capital formation, that is university education, and the acquisition of personal skills, was not as widespread as it is now. In Milanovic's own words, going to college was considered more of a luxury consumption than an investment in the future. This way of understanding study, among other things, favored workers being much more homogenous. You could say that with some exceptions, most of them worked in jobs with similar categories, and since they did not have very specialized or productive training, they could not easily attain salaries comparable to capitalist profits. However, as you can imagine, with technological development and cultural shifts, things changed completely. Starting in the 1980s, US workers began to become more educated and to enjoy large increases in their salaries. In particular, it was the most highly educated of all, the most productive and up-to-date workers who benefited most from the wage increases. This wage transformation meant an enormous expansion of the range of what a worker could expect to be paid. Technically, we're talking about an increase in wage inequality. From then on, the existence of very, very high wages, even comparable to employers' profits, became a reality. The rich were no longer only the capitalists, but also the most skilled workers. Social differences began to exist among the workers themselves, and not only among the various social classes. Although, regardless of all this, I know what many of you will be thinking. This wage increase only explains why some workers were able to become very, very rich, but it doesn't explain why capitalists bet on labor as well. Nor does it explain why the mixed rich have appeared. So, what is behind this curious merger between workers and capitalists? The answer is that there is not just one, but two factors that promote class mergers. The first factor is that classical capitalists would have seen a very good opportunity in training and work to have a high alternative income to the returns on capital. If for whatever reason the stock market, profits, or interest rates were to collapse, well-paid work could be a foundation for ensuring a high standard of living despite falling returns on capital. In other words, that wage labour would be something like insurance for the former pure capitalists. In addition to all of this, it must be added that since the 1980s, there has been a very significant drop in taxes. While in 1980, the marginal labour tax rate was around 60%, at the end of the 1990s, it dropped to less than 20%. This drop was very curiously related to the increase in homoplucia, a relationship with a quite coherent theoretical sense. That is, if capitalists want an alternative source of income from labour, but labour is also less taxed, then they will devote even more effort to generating income from labour. Be that as it may, this is the only first factor explaining homoplucia. The second factor has to do with the fact that it is not only the capitalists who have become workers, but the workers themselves have decided to become mixed capitalists, thus displacing the former pure capitalists. And keep in mind that we are not talking about workers setting up companies in their garages or anything like that. We're talking about workers becoming capitalists, thanks to practices such as investing in the stock market or buying financial assets. Investments they were able to make precisely as a result of the fact that wages were getting higher and higher. Think about it for a moment. In Anglo-Saxon countries, such as the United States, it is much more common to invest in the stock market than in European countries, such as Spain. While in Spain, only 3% of the population regularly saves by investing in the stock market or mutual funds. In the land of Uncle Sam, 27.6% of inhabitants do so, almost 10 times more. With a more deeply rooted financial culture, homoplucia has a greater chance of success. At this point, and seeing the two ways in which the mixed rich can appear, let me ask you, who is more important in homoplucia? The capitalists who have become workers to have an alternative income, or the high-wage workers who have started to make investments? Well, once again, and contrary to the general perception, everything indicates that it is precisely the workers who earn the most and who have been displacing the pure capitalists. If we take the top 1% of capitalists, only 67% of them are also among the top 20% of workers. On the other hand, among the 1% of workers with the highest salaries, and note here we're talking about doctors or MIT engineers, not just ultra-rich CEOs, 80% of them are among the 20% of capitalists who obtain the highest profits. That said, it is worth mentioning that this ratio is becoming more symmetrical as we look at smaller percentages of ultra-rich, and that, as we have said, it is still too early to give 100% accurate conclusions. However, having seen what we have seen today, it is time to draw 3 main conclusions. First conclusion. Although inequality is growing in developed countries, it is a mistake to attribute this rise to the extraordinary profits of entrepreneurs, or at least, it is a mistake to attribute it only to entrepreneurs, since, as we have seen, wage earners are reaching higher and higher positions on the wealth ladder. Second conclusion. It is no longer just that wage earners are displacing capitalists in the wealthiest positions, but that there are actually fewer and fewer pure capitalists and pure workers. Instead, what is emerging is a new class of mixed rich who profit from both labor and capital. This is what is known as homoplucia. And third conclusion. Everything indicates that the key to this happening is that the workers, rich and not so rich, begin to hoard capital that previously belonged to pure capitalist. Who knows, maybe the real class struggle will come about because we all invest in the stock market. Given the conclusions, it is now up to all of you. What do you think the future holds for the social classes? Will the homoplucia process continue, or will it slow down before it reaches 100%? Do you think that investing families will eventually adopt the investing tradition of the United States? Are you for or against inequality? Is it important that inequality be between capitalists and workers, or only between workers who earn more and those who earn less? You can leave your answers in the comments, and as always, don't forget that here on Visualeconomik, we release new videos every week. So subscribe to the channel, hit that little bell icon to not miss any of our updates. If you like the video, go on, give it a like, and I'll see you in the next one. Take care, see you soon.